Hey guys, what's going on? It's Lewis here with Crypto Elite, and today is August 12th. Going to do another market update, go over everything, and just let you know what I am thinking. We're going to start off, like usual, with the total market cap and just go through total market caps, the dominance levels, Bitcoin, Ethereum, NASDAQ, stocks, the S&P 500, and then a few other alts. Also talk about some of the big things that are happening. So I guess I'll start off with that actually. Going to my Twitter profile, I reposted a couple things, which is that Ethereum merge has been scheduled as a tentative date approximately September 15th and September 16th. So I'm going to put that into my chart. And so going to my chart, you could see that I just put something in on September 10th, and I added an alert to this, basically saying that the ETH merge tentative due date is, this date. So buy the rumor, sell the news. Probably a good idea to start selling some around September 10th. That gives 5 days before the big news event. And honestly, I could see Ethereum pretty much continuing to trend up until around this date. I mean, that's what I've been saying since July. Pretty much just like, buy the rumor, sell the news, and don't really need to do too many trades. So it's been working out pretty well. So that's the biggest thing right there, is that the Ethereum merge is happening. Possibly like Terrence.eth says it's possibly the 6th, but everyone else is saying the 15th, 16th. So I'm going to say the 15th, 16th. And also the last testnet for the merge, go early, went very, very, very well. So it's looking, positive for Ethereum. Additionally, if you go to the weekly chart, you could see that right there, like this was a really, really big area. So the fact that we, came back above this area, basically 1700. I mean, once we did that, that's the go-to for me. Like, okay, like I want to long in this area. As long as we're above here, I am saying that we're going to go higher. I think that we're going to go higher. If we fall below here, then it's like basically we could fall all the way back to $1,000, because this is such a huge, huge, huge key level at 1700 that I'm really just playing this level as the biggest level possible, because obviously we got the bounce here, and then we fell below it, and then we got a rejection from there, and now we're above it. So as long as we're above it, I'm bullish on ETH. And so now that we have the important news stuff out of the way, let's go to the total market cap and check this out. So if we look at the total market cap, you could see that we came down and we never touched the 78.6. So my overall thesis is still that we end up doing something like this, where we come up here, maybe do this, and then come back down. And eventually, like, I think that we're going to come back down here, because we never touched this 78.6, $730 billion, which is what I was really thinking we're going to do. And also, I hardly see like bear markets just stop right here and then come up. It's usually like, it stops and it has a pump up and then goes up and then comes back down. I mean, at least that's what we've seen in the past. So I am expecting it to come back down. And then also fundamentally, I don't really know what's changed too much, fundamentally speaking, in terms of the macro picture of things. And we don't really have new, hordes of money coming in, unless I suppose you say like BlackRock and some other big institutions are coming in, but they're only dealing with Bitcoin. And at the same time, there's still a lot of uncertainty in the world. And from some of the things that I've been reading, it's almost as if a lot of the price action, a lot of the like upward momentum and just basically price action that we've been seeing has basically been people that are in the market. Like, it's not new people coming into the market. That's at least something that I've saw on Twitter. So it makes sense, because people that were in crypto aren't really like throwing new money into crypto like they were back in late 2020 and basically 2021. So I'm thinking that we will move up, but I am still macro bearish. I mean, we're in this long macro bearish downtrend and we broke the 61.8, and typically speaking, we come down to the 88% before we move up. So at least get a double bottom, or like run this low, scoop up all the liquidity down here that I'm sure like a lot of people have, and then zoom back up. But before that, there's still no reason why we can't, get a move up for and add another, $1, 2, $300 billion, $400 billion to the market cap, or yeah. So I am thinking that we're gonna move up and at least get to this previous support resistance level. If we take the Fibonacci from this leg down, top to bottom, 1.312, right around that area. If we take the tool and go like this from here to here, this area right here, 1.3, that's the key area, because that's the 38.2 Fibonacci. Also, it's like right above this big support resistance level, which I think means that there's a lot of liquidity in this area for people who just like, sell everything or short the market here. So this is really the box that I'm looking at. Plus maybe around this area, around this time, we will have the merge happen September 15th. So here's the merge. And so maybe we'll have it come up until the merge and then fall back down. That's what I'm leaning towards. Additionally, that gives plenty of time for the market to come back down before we get to the 1 year mark of the November high of the market, basically November 8th, 9th, 10th, 11th, this whole area right over here, these few days. And then this is 365 days from this time. And I just think that under 1 year isn't really enough time to just say that it's the bottom. I think we need at least 1 year, maybe even more, for it to really say that this is the entire bear market. Because last bear market lasted 2 years, and basically 2018, January 2018 to January 2019, January 2019 to January 2020, and January 2020 to mid 2020. That was 2.5 years. And that was during a really good economic time, and a time where the stock market was going up and companies were not laying people off. People were not losing their jobs. People could afford things like rent and homes. And it was just better. Like the economy was just better. The macroeconomic outlook was just better. Everything was just better, and things were going up. And crypto still had a bear market back then, and that was 2.5 years. So I don't think that 1 year is really like pushing the boundaries, like the theory of saying that the bottom is not in and that we still have a long ways to go, and we're probably going to head back down eventually and make at least an equal low before the end of the 1 year mark, before the last high. I don't think that that's such a crazy thing to say, So that's my theory on the total market cap. And going into the total 2, we have on the total crypto market cap excluding Bitcoin, the same thing, where we were in this consolidation, we busted through it, we retested it, we busted through it, we retested it, and now we're busting through it again. And so maybe we'll retest the previous support, and the 38.2 from top to bottom is right here, $748 billion. So this is the area that I would really want to look for shorts. And if I'm in any long positions, by the time it reaches here, I would just want to get out of my longs by the time it reaches here, because then it'll most likely, go down from there. So that's really what I'm looking at the most, and I could see it. I could see it coming all the way down there as well. And is this November 8th, November 9th, November 10th? That's the same deal when it comes to the alts, alt cap. So I'll go to November, 8th, 9th, 10th. Like this right here, this is the 1 year mark. And so I usually November is when the real, bull markets tend to start. If we look back here, it was November-ish, and this was the kickoff of the bull market was in November and then finally December. And there was also, I mean, damn, even July, but really June, July, excuse me, July, August, September, October was all consolidation. And then November was really a big move up, and and basically consolidation for November. But that was really the big move up that surged it. So why not have a big move up, in November after it comes back down, and have this move be something like what happened here, where it went up and then came all the way back down and made a lower low and just freaked everybody out before and took all the liquidity from everyone before jumping all the way up. Like we haven't had, looking back at this, like where's that really big capitulation? And even looking at Bitcoin, let's look at Bitcoin, right? Like the big capitulation was like here, was like from here to here, but because that was 30%, that was big enough. But usually there's like a really big type of candle before another move up, before a big move up. And that's pretty much what I'm looking for, is something like that, because there needs to be something, like this. Like this was that huge 30, 36, 37% in just 2 days that took out so many people, and it came below these lows. And even back here, like this was the big support level, boom, broke down below the big support level before actually consolidating and making it back up to the first run up. So yeah, I don't know, I'm just not convinced. I'm just like not really convinced. And before we actually get to Bitcoin, let's actually just look at the dominance levels real quick. Okay, so looking at Bitcoin dominance, so well, actually what I like to do is I look at the total dominance first. And pretty much for altcoin dominance, like this area right up here is the area that I would want to get out of my alts, because it's such a key level and it's been respected so many times that once it hits here, I'll just get out of all of my altcoin positions and just let the market do what it wants to do. Maybe I'll short the market or something. I don't want to look at dominance levels for longing or shorting the market. But I would look at them for getting out of positions, because the dominance levels don't really work as well as they used to. But it like once it reaches up here, could be a good indication that we're definitely getting close, and maybe you'd want to, look for shorting opportunities if it's up there. But you have to use PA in order to really get the entries and stuff. You can't just focus strictly on dominance levels. And the inverse for total is the Bitcoin dominance. And so once this comes down here, Bitcoin dominance will be really, really low. And so that's when I'll just like de-risk and probably just go back into stables once it reaches down here. And, same thing, like reaches up here, de-risk, go back into stables, down here, de-risk, go back into stables. And then we have the total DeFi dominance. And so for me, the 61.8 is where I would de-risk and go back into stables if it comes back up here. So for the dominance levels, it's like if this gets up here, or if this gets down here, or if this gets down here, up here, and if this gets up here, then this will get down here at the same time. Then I'm just gonna, de-risk based off whatever happens first. And so those are the dominance levels. And so now we could go more into Bitcoin. Okay, so now we're into Bitcoin. Okay, so I actually just went ahead and put on I separated the charts into monthly, weekly, and then my shorter term trading charts. And this is the monthly chart that I have for Bitcoin. And I just point out different levels, right? So for the monthly chart, let's just start with the first thing that I did. So the first thing that I did was I went back actually, and I looked from the top to the bottom of 2013 to 2015. So that was basically a 2 year, 2014 to 2015, January. So that's basically 1 year and a month. Bitcoin dropped 91.5%, but really bottomed out around 86%. And that was approximately that was 396 days, right? So 396 days for the 2014 to 2015 bottom or crash or bear market or whatever you want to call it. Then in 2017 or 2018, we had another crash and it bottomed out at 84%. So the last one was around 90, but really it bottomed at 85. And this one was 82, 83, somewhere around there. And it basically bottomed out 365 days to 396 days after the top of, the bull run in 2017. And then so we have those two references, 396 days, basically 396 days. So what I'm saying is 395 days means the bottom would be December 1st. So that's where the bottom would be if this bear market is the same as the last two and it lasts 396 days. Then the bottom for this one should be December 1st, 2022. So November 8th to December 1st, basically halfway through November, the second half of November is probably where you'd want to be dollar cost averaging the most. Not financial advice, but that just seems like it's the most logical thing to do based off of the last two cycles. Okay. And the other thing I want to do that I say is that on the monthly chart from this top to this bottom, the 38.2 is at $29,289. So basically $29,200. Okay, the yearly open and close for 2020 and 2021 was 28,900. So between 28,900 and 29,200, that is the yearly open and close for 2020, 2021, and the 38.2. So this is a huge area, a huge resistance right here, number one. Okay, and then of course I have the 61.8 also mapped out as well in case we get up here, but I would definitely want to be selling it up here in this level if I, just whatever I hold. And then additionally, down at $14,000, that's the 88%, and that's just above the 2017, 2018 highs. And it is the area where miners become unprofitable, and it's also 80% down. So if you remember, this was 82, 83%, this was 85%, 90%. So at the $14,000 level, that's here it is. That's 80% down from the high. So if we reach 14K, that's where I'll just say, okay, I'm going into everything. I'd probably go into Ethereum. I just go all into Ethereum, to be honest, because Ethereum has outperformed Bitcoin for every single cycle so far. So I'd pretty much go all into Ethereum, probably 80% Ethereum, 10% Bitcoin, and 10% just random alts probably. And this is really the area that I want to target hard. So hopefully but there doesn't seem to be a lot of time. There's only there's only three months left, and I don't think we're gonna just see a straight 40% plus candle drop, or if we come up here, that would be a 50% drop from the 38.2. So that makes me think that we're going to extend this bear market for even longer. It'll probably come up, do something weird, and then come back down, and maybe 2023 would be the time that we see it turning around. So anyway, these are the key levels that I have marked out, is basically 29,000 and the and 14K. Those are the two big levels. And of course you have to have the previous low, or the low area right around here, which was 19,000 to 20,000 area, or 18,000 to 20,000 area, because this is also something to look for. So that's the monthly level for Bitcoin. These are just big levels that I'm looking at. Now I look at the monthly levels, the big things for Ethereum, and looking at Ethereum, just like the bigger levels. And so for Ethereum, the monthly levels, if you take the Fibonacci from the top to the bottom, to the most recent bottom, the 38.2 is right around where we are right now. However, because we still have not such a long time, but a few weeks until the merge, I think we will just completely bypass the 38.2 and head up either to the 50 or maybe even the 61.8. Definitely if we hit around 2,500, that's when I would want to get out. So I'm going to put, maybe 2475 here. And I'm going to say, start scaling out, or just get out of all of your Ethereum here. This level is where I would want to look for shorts. If the shorts start materializing, then I would, take them. But this level is where I would definitely want to just get out of the market and evaluate in a little while. Okay, so that's Ethereum on the monthly. And now let's go to Ethereum on the weekly. And I'm going to just do Ethereum on the weekly first, and go through Ethereum first, because Ethereum is more volatile. And pretty much in cryptocurrency, you want to trade the narratives. You want to trade the coins that have the most volatility and the coins that have the most news surrounding them. So right now there's obviously a lot of news around Ethereum, so there's going to be more opportunity with Ethereum. So I'd want to try to trade Ethereum more than Bitcoin, and then after that, maybe I'll trade Bitcoin more than Ethereum, or I'll look for other coins that might possibly have a one-up on Ethereum and then want to get into those. But right now I'm going to look at Ethereum first, and then I'll go back into Bitcoin for the shorter term trades. So we have the monthly chart. And so these are like the big areas, that I plot out in my macro time frame for Ethereum, right? And now let's go into the weekly chart to basically just hone things down a little bit more and get a little bit more clarity. And then we could go into the 12-hour, 4-hour, 1 hour to try to get those smaller trades, or those more quick trades. Okay, so for the weekly, it's literally the same stuff as the monthly. You got the 50 and you got the 61.8. 50 around 2,200, and the 61.8 just under 2,500, or just about 2,500. So these are my two big levels, and so I got those in as well, and then the 88% down here. But obviously we're in an uptrend right now. It would be nice to get a retracement, but look, on the weekly, you don't get the retracements. Like, look at this, down for 9-10 weeks straight, no retracements. We're finally starting to get this. So a big bounce seems likely, like a big enough bounce seems likely, 100% plus. Right now we're at 115. So why not, 150%? 150% off the bottom is exactly at the 50% fib retrace, and just about 200%. I guess it's more about 185 is at the 61.8. So yeah, I think the 50% is a pretty key level to look out for, to look for shorting opportunities for sure. We're probably going to get some rejection off of here. Whether this will be the actual rejection that brings us all the way back down to the, $700 range Ethereum, I don't know. Or maybe we'll get a little rejection, a move up to 61.8 and then back down. That seems, honestly, it seems more likely to me that we'll see something like that. Because I know a lot of people are actually offloading their ETH right now, but I think that that's a mistake. I think we still have too long of a time until we get to the merge so that the price will still keep on going up. And I'll also put this in here just to denote the merge finalization date around the 14th or 15th. It's the weekly chart, so I only have the 12th on here. But if we go down to the daily, then we could put that in there on the actual day. So now let's go to the daily chart for Ethereum and try to see if there's any trading opportunities right now that we could look for. Because on the weekly chart, go back to this weekly chart, it's pretty much like, I suppose you could look for shorts, but I wouldn't look for shorts on the basis of such a big rally into such a huge news event. I wouldn't look for shorts here. I would look for shorts higher up. And other than that, the previous low, the previous area to long on the weekly chart would be down here. And we're so far away from that there's no point in using the weekly chart to trade right now because we're so far away. Same thing for up here, 2,250. Like, we're so far away from that on the weekly chart. There's no point in trading on the weekly chart. So that's why we then go down into the daily chart to look for not just the daily chart actually, but the 12-hour. I'm going to start using the 12-hour initially and then go down to the 4-hour and then the 1 hour to do all of my trades, because that just seems to be much more accurate and you could pinpoint much better trade entries and also get way better risk reward. Especially like the way that I was doing it before, the reward was really, really good, but the risk was also really high because the stop loss was so far out, because I would use the daily charts, and then even on the 4-hour charts I would use those. But if you could dial it in, if you could get the areas of interest on the 1-hour charts or on the higher time frames, and then go down to the lower time frames once we reach those areas of interest, and then look for price action that will corroborate with or correlate with the areas and what your thesis is. So if you're saying, for instance, 2,500 is going to be a big area of resistance, and then we come up here and we do something like this, and we do something like that, well, that would be an amazing shorting opportunity. Or even before we get here, if we come down here, if we do something like this, then you would want to short this area right here. You would definitely want to short this area. So before, I would usually typically preemptively put a short in, maybe like right here, and it would work out really well. But then we would get this swing failure pattern or something like that, and my stop would typically go above my entry, and then I would end up getting stopped out sometimes. So now, to be even more accurate, what I'll do is perhaps maybe I'll put a short position on initially on the higher time frames, but then I'll go down once we reach this area into the 1-hour charts and look for the type of price action that can show me really, really good tight stops and good RRs, so that I can put on trades with much bigger position sizes. And so now that we are on the area or the time frame that I want to look for shorter term trades, that's what we're going to do. Because right now this is too high. Like, this is simply too high to be looking at, like I just explained. So let me clean this chart up really quickly and I'll be right back. Okay, so now we're on the lower time frames. So I am going to trade just off of the lower time frames. I don't really need the higher time frame stuff. So let me just get rid of that. And pretty much got rid of everything except for my indicators so far, because I do prefer, I could use the indicators on the lower time frames too as well to get a better feel of the market. And so what's the first thing that I see? So first thing that I want to do is I want to plot out a couple levels that I see that stand out to me. First one is this one, and that's because this was a clear support right here, 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 and then clear resistance, and now we're above it. So as long as we're above this level on the 12-hour, seems really, really good to me. So as long as we're above here, I'm bullish, and if we do end up falling back below here for some godforsaken reason, I would want to short somewhere around here and literally just target down there, because this line is incredibly important. This is a huge line. And so if I'm looking for a target, let's say I got in here, what would be my target? Well, my target would be somewhere up here, such as this high right here, which is 2143, because that's this high of this range right there. And so I have the support area, I have the resistance area, and then I draw a trend line to get the line area of where it's most likely to bounce off of. So I have this, and it looks like this is pretty close, although this trend line is going up pretty darn at a pretty big slope, or I guess pretty small slope degree, and it's, difficult to say that it'll just come down here and bounce off of here. Sometimes diagonals are really, really good, especially on the longer, higher time frames, but on the shorter time frames, I don't know if I would necessarily use diagonals, especially right now. So yeah, I think I'm gonna delete this one. And also, if we're using order blocks and things like that, the first thing that I see is right here. We have this down move before the up move that broke the market structure. So this is, in my opinion, what the where the order block is. And so if I zoom in over here, we have this order block in this big area of support. So then what I would do is I would use the Fibonacci from the bottom to the top and look for an area that I would want along, and that's it looks like the 61.8. So if the price comes down into this area right here, 1770, I want to say, then that's when I would look for longs, and that would bows very well with the high, low, higher, high break of the market structure, and then drop down, and then higher, high break of the market structure, drop down again. So maybe that's on the 12-hour. Maybe on the 4-hour, there's a better entry. But the reason why I would want to get in here and I wouldn't want to just like market buy right here is because, even if we go down to the 4-hour, we had this basically area of consolidation, and there's still 41 minutes left, so we don't know if this is going to create a new high, but we had this area of consolidation right there, and that was the high and that was the low. So if this came up above here, then I would say, okay, I want to get in, and I would probably get in around like 1890. But first off, this might wick all the way back down in the next 41 minutes. I don't know. And also, it won't come up above this high right here. So it broke the market structure for the closes on the 4-hour so far, but not the wick. And I would prefer it if it closed above it on the wick, because if you go down to the 1-hour chart, then this obviously right here is the resistance on the 1-hour chart. And I would say if it breaks above here and it closes above here on the 1-hour chart, then I would look for a long. So I would probably come down and I would put a long position on right here. And if not, actually, I'd probably put it on right here. and then I would go down to the 1 hour, and this would basically be my trade setup with the target 1 up here, but I would also have a target 2 be up here, probably right there. So that's if on the 1 hour this closes. So, but there's still 40 minutes. So what I would have to do is I would have to monitor this and look at this. And that's one reason why I don't really go on the smaller time frames, is because I'm not in front of my computer, 24/7. I'm not checking it 24/7. I'm trying to, build businesses and do things. So I don't look at it like that. I look at it like on the higher time frames, because it gives me more time to, first off, it's trade less, profit more. I like trading less and profiting more. But I do notice that if you do look at the higher time frames and then go down into the lower time frames, you can get that really, really, really sweet risk to reward ratio. Like, this would be an insanely good risk to reward ratio, right? And so if that's the case, so like if I could get that, then obviously that's what I would want to do. But I would have to wait until and see what this candle does. Otherwise, on the 4 hour, I'm looking at this zone, this consolidation, followed by a breakout, and I would have to wait to see how far it breaks out. Take the fib from the bottom to the top of the breakout, and then I would probably want to get in at the 61.8. So if it did something like this, I would come back to try to get in right there before a continuation up higher. But like I said, on the higher time frames, there's just like, it's not anything that it's not in an area that I would really look to long, because this is the longing area down here, and this is the shorting area. We're literally right smack dab in the middle. Not to mention, we're really close to the 2000 it's a big dollar mark, 2000. There's a lot of people who bought at $1,000, and when they say when it gets to 2, they're out and they're selling it. So we're probably gonna have some resistance around 2000. So I wouldn't be surprised to see it, come up to 2000 and then come back down to 1850. I don't know, maybe even down to 1800, 1770, somewhere around there, before coming back up here to 2100, something like that. But as of right now, like, you do want to be longing the dips. You definitely want to be longing the dips, in my opinion, because we're in this huge uptrend and we still have some time until the merge, which, by the way, I should probably put that on this chart right here. So it's September 15th. So this is September 14th or September 15th. So I'll just put that there just so we know, like, okay, I want to be out. I want to be out a few days before this happens. Yeah. So just going back to the daily, this area of 1730, like 1755, this whole area right over here, this is where I would absolutely throw on a gigalong, and I would target here, and this would be my trade. So I'm definitely doing that. I'm already in, not obviously, but like, I'm already in Ethereum. So I'm actually going to be stacking more in. I'm going to be stacking some in on the lower time frames up here, over here, right? But if it reaches here, that's when I'll really go in, a lot harder. Like, I'll say 1754, and I'll bring this down to this area right here, and this will be my bigger trade setup on the higher time frame. On the lower time frame, though, yeah, I'll be stacking in some ETH at around 1860, around 1812, around 1770, just like continuing to add on to my long position. As long as we're in this uptrend, I don't see why we should stop, because there's still plenty of time until the merge happens. So yeah, I just want to continue to add on to my position. Same thing, like same thing over here. Like, okay, so you reach the resistance right there. So sell, right? But where do you add on? The 50% was a great area to add on. Now that we're above here, maybe the 50%, sorry, here it is. The 50% at around 1800, and then of course the 61.8 at 1760, 62. Great buying opportunities, and the support right there as well. So yeah, I'm just going to continue to add on to my position, but this would be the bigger trade, is like something around here, like this. Okay, and then finally for Ethereum, looking at Ethereum against Bitcoin, this level right here, this previous top, it's obviously a huge level. So if Ethereum comes all the way back up to the previous high for this cycle, that against Bitcoin, then I'll obviously not obviously, but I would sell my Ethereum, and I'd probably just sell everything, to be honest, because I think that Ethereum would go down. Most cryptocurrencies would go down as well once Ethereum gets up here. So there's not a lot more room for Ethereum to go up against Bitcoin, so it's looking a very worrisome, like down here was fine, but up here it's looking a little worrisome. So that's ETH, basically ETH. And now we could go into, the Bitcoin charts. We already have the Bitcoin on the monthly chart, right? So like this is the Bitcoin monthly chart. We got all that down, and now we could go into the weekly and then set up a trade. So yeah, we have this monthly chart for Bitcoin up here. It's been pretty bad, pretty brutal. So let's go into the weekly. Let me clean this up real quick. I'll be right back. And just looking at Bitcoin on the weekly chart, the very first thing that pops out to me is this zone right here, which was the low right here, along with a lot of support down there. So there's a lot of liquidity in this area, right? And that's 28,900. And we already said on the monthly chart, this right here, 28,900 to 29,200. This is the major zone to basically, I would want to be out by this time. And I also noticed that if you take the Fibonacci from the top to the bottom, that also lines up with the 78.6 at 29,000. So even though we might hit 31,000 to get the liquidity up here, I'd probably just play it safe and be out by 29. So, or a little bit below 29. So 28,890. This is where I would simply just want to sell everything. I mean, that would be a solid 65% rally, from the bottom. And then maybe it's too risky up here because it's still too early. So maybe something like this ends up happening. I can't tell the future, but it definitely is possible. And so let me also see, maybe it's the 38.2 on the higher time frame. So top to bottom. Does this also line up with yep, exactly what I thought. So you could see the 38.2 is 29,200 on the higher time frame chart, or on basically the longer leg down, the bigger retracement, or this is actually an expansion, but to the downside. So there's a lot of confluence right in this. Really, this is a big area. A lot of resistance here. So let me add that as well. Okay, so now that we have the weekly down, let's go to the lower time frames and see if there's anything that we could do. Any entries and stuff like that. So let's delete these things right here. Delete this as well. So what am I looking at here? 12 hour. This is a this is a better diagonal. I like this diagonal more than I like Ethereum's diagonal. Ethereum's diagonal was more like this. Like once it's so high, you know, once the degree is so small, it doesn't really matter as much. It's not as significant. This one, obviously, we got the breakout followed by the 61.8 retest right here, golden ratio, followed by the breakout, followed by the retest of the SR flip. Two retests of the SR flip. So this is a very, very key level right here. So definitely a key level right here, but we already got the 2 taps. I don't know if we're going to get a third tap, to be honest, because that would mean that we'd have to break this line, and that would be sort of bearish. It would also mean that we would have a swing failure pattern on the 12 hour above here. I mean, we already basically did right here. So yeah, looking at this on the 12 hour, this is what I see. I see move up followed by move back down. That took out this high, but it's more like low, high, higher, low, higher, high. We're still in this bullish low, high, higher, low, higher, high, higher, low. This right here was a lower high than here, but it was a close. So, and this was a wick. So the close was higher. And then we did end up making a higher low regardless, followed by another break in the market structure and a higher high. So we're still making higher highs and higher lows. That's the point. And so that's bullish. So I'm long bias long. Obviously, I would rather buy Ethereum than Bitcoin. But if I had to look for something, what would I look for? Well, this right here, this area was the previous high, right? And now it was this high as well. So let's go down into a lower time frame. Going down into a lower time frame, we can see that we ran the high and then closed below it. Let's go down to the 1 hour. Yeah, same thing here. We ran this. See, this is what I was talking about going to the lower time frames. On the 4 hour chart, we ran this. We basically ran this high and then closed down below it down here at 24,355. You could say that we ran this high as well, but it's just so much more clearer on the 1 hour chart that we ran this high right here and then fell back below it and broke the market structure right there, which means that a short from here down to here would have been the move, but we didn't even get the retest. We didn't get a retest, so that wouldn't have worked. But as of right now, what we got obviously a down move before a nice up move, and that broke this market structure right here. So even on the 4 hour, down move before an up move that broke this market structure. But this could be just the B wave up before the C wave down. And technically speaking, we never retested this order block down here, because this was the down move before the upward move that broke market structure right there. And then we typically come back down. I wonder if you go down to the 1 hour, you could see something. So no, this was the down move, right? And then this was the up move, and then boom, big upward candle that broke market structure, but we never came back down. Even to this area, you could have actually said, this was the low. Yeah, it's not like we did anything crazy to warrant getting in right there. So for Bitcoin on the lower time frames, I would probably put this trade on the lower time frames. So actually, yeah, I would put it on like this. Still amazing risk to reward ratio. I mean, this risk to reward ratio. Actually, I'd probably put it on like this with a stop loss timeout of 1 hour. Yeah, I think that's what I'll do. So you could see that we have the RSI and stochastic RSI coming down. So it's probably going to continue to come down in price. We never retested this order block on the higher time frames, 4 hour. We never came back down and retested it. We had a swing failure pattern from here and one from here as well. And not only that, let's check this lines up with 61.8 from this move down. Oh, sorry. The 61.8 is actually right here. But that's on the maybe on the daily. Hold on a second. Let me check the daily chart, see if there's a difference. Okay, so on the daily chart, this is a huge wick. So I actually probably wouldn't count that as the top. I would count this right here, or this right. Let's say this right here, and then go down to the 4 hour chart, and then the 1 hour chart actually, because that's where I was at. And in that case, the 61.8 lines up pretty significantly with the area, right around the area. So this is going to be my trade for this, and it's going to be based off of this order block. And the only thing that I'm worried about is this wick. But what I'll do is I'll get in here. I'll have this trade set up, right? And then down here, I'll look for longs if I get stopped out. But it's the thing that I hate about doing that is that like it's less than it's like 1%, it's like a 1% difference. But I just really wouldn't see it coming all the way back down there. This is a very major support, very, very big major support area though. And we are at the top, but I just think, I think we're bullish enough to the point where this is good. This is good. So I would do that. And then I would target this as the first target. This is the second target. This is the third target. And this is based off of that weekly time frame that I talked about before. So if I go down here, 61.8 of the move up is right there. And then this is the major area. So I'd take some profit at the, major support, major area, some at the 61.8, and then some at the previous top, assuming that we're going to have a continuation pattern upward. I don't see what's wrong with this because, yeah, it looks, honestly, it looks good to me. Only thing I see is that the only thing that I would want to really, really look for is if we do come back here and we sweep this, I would want to see something like this in order for me to long again. So let me write that down. Yeah, so this is what I would look for Bitcoin. Okay, and now I'm just going to go over the dollar and the NASDAQ and the S&P 500. So first off, we have the US dollar currency index. And this broke out of a multi-year consolidation, and that's bullish as F. So as long as the dollar keeps on moving up, I doubt we'll see another bull market, because this was the 2017 bull run, this was the 2018 bull run, and we broke out of this huge consolidation. So we're probably going to keep on going up until at least the 161.8 fib retracement at 111. And if we look at the monthly chart and we take the Fibonacci from this top to this bottom down here, we got to look for the 61.8, and that was right there. Okay, boom, we tagged it, we fell down, we tagged it, we fell down. However, Now that we broke above it, the next one is the 78.6, but this is so far back, 2002, that I probably wouldn't even count this anymore, because maybe at 109, maybe the 78.6, but honestly, I would think that this fib extension from here to here is more powerful, and so I think 111 is going to be where the top is at, unless we just literally go all the way back up to $120 for the dollar, which is it's totally possible. Why not? Look at what happened before, and we're in an environment within the government where this might happen, although I'm pretty sure they're going to turn the money printer on. Inflation's going to go up, and the dollar is going to end up going back down again. But we might see this top. Like, I'll be cautious at the 161.8, at $111. But if we reach up here, then I'll probably just go back into crypto, like all in, sell my houses, sell everything, and just go all into Bitcoin or any Ethereum and stuff like that. I do like how we're getting the turnover on the RSI on the monthly, but look at the weekly. We've had this happen like multiple times, and it goes up. So the RSI is not something to use in this situation, in my opinion. So yeah, I'm still bullish on the dollar, even though short term, of course, there's all of the speculation and the dollar is going down, the money printer's back on, yada yada yada. But I don't buy that. I think that dollar is gonna continue to rise. Now let's move on to the NASDAQ 100. So if we take the Fibonacci from this bottom right here to this top right here, you could see that we respected the 38.2 really, really nicely, and the 50% really, really nicely. The fact that we did not get to the 61.8 at $10,630, it infuriates me, but also it makes me think that we're gonna turn around and come back down. All of this, honestly, I feel like all of this is manipulation by the government, and it's just to lead up into the elections in November. And it's like, I don't think that this is real. I just don't think that this is real. And also, we got the high, we got the lower high. Maybe we'll get another lower high. So that's what I'm thinking. I don't think this is real. I think this is fabricated, and we're going to end up coming back down and tagging the 61.8. I think that is in the books. This would be the shortest bear market ever. We're in a freaking recession. These companies that are in the NASDAQ are laying off thousands of employees. Thousands of people are being fired because of where we are. Like, you can't fundamentally have things be so bad and yet the price, continue to move up. Things need to turn around. So this is a bear market rally, and I'm going to look to sell. I just don't really know where, but if I look at the monthly chart, this is the candle. This is the monthly candle up before the move down. Maybe the weekly chart will give me a little bit of a better picture. I'd say this previous high right here, right around there, I'd want to be out by this area, because this is actually, not only is this high, but it's also up here. It's around this high. Also, it's around this low. This is a significant enough level to where I'd be like, okay, I'd probably want to get out around here. Okay, and then finally, I actually want to go into Solana, because look at Solana's chart right here, right? This line would be an amazing buying opportunity, in my opinion. This is the type of diagonal line that I really like to see. So if this gets hit, I would definitely want to put on a trade for Solana, because I think that it got held back a little bit because of the hack that happened not too long ago. However, it's obviously still doing very well, which means that everything's just freaking manipulated like usual. But look at Near Protocol, right? Near Protocol up 100%, Meanwhile, Solana up 70% because of the hack, and it's not as actually scratch what I just said about what I was about to say, because I was going to say that other L1s have already went up, but Sol didn't because of the hack. But I just checked the other L1s; they didn't really go up either. So yeah, I'm bullish on Solana. I'd like to see Solana come back down here and tag this area before another move up. If we go down into the lower time frames, let's look at the 12-hour first. We could see that we have, this is not a break in the market structure, so we have the down move for the up move that broke the market structure right here, and then we ended up coming back into this order block. So maybe on the 4-hour time frame, it was easier to say. Okay, so on the 4-hour time frame, first we had the down move before the up move that broke market structure, and this would have been where to get in with a stop here, target up here, but that never got hit. And so when this went down and then this broke market structure right there, this would have been where to get in. So you would have put a long position in here, and this would have been the trade, would have been like this on the 4-hour. So still a 3.37 trade setup. Really, really good. And even on the 1-hour, let's see if we could go in even further on the 1-hour. So on the 1-hour, yeah, we had this huge move up. It never came back down. This was the move up. So this would have been right there. That would have been the trade, because this was the down move before the up move that broke market structure. Not just this one, but also this one up here as well, right? So this was the order block that broke the market structure to the upside, and you would have wanted to get in, and you would have gotten in right there with a stop loss underneath there. 7.72R. Although, if you're trying to get in how I'm trying to get in at this line, then eventually this might not end up working out for you. But there is also, you could look at this. This is a pretty significant line as well. So there's two trend lines that I really like. One on the 1-hour, it's this one, right? And I'd probably be more prone to want to get in on this 1-hour, considering that things are looking more bullish, right? Compared to the 4-hour chart or even the daily chart, where we have this horizontal line, which has been respected really, really, really well. Ooh, this is a tough one. This is definitely a tough one. It's just the closer we get to the apex of this ascending triangle, the less likely it is gonna, come down. Looking at it like this, though, I just pulled the fib from this bottom to this top on the 4-hour chart, and it's like this. I'm bullish. This is the 4-hour chart, and this is a 1, 2, 3, 4, 5 waves up, followed by what would like the $41.50, basically $41.50. That would be a really, really good trade setup. So I'm going to take this trade right here. And then we will see, maybe if I go down to the 1-hour, I could get an even better entry. So 1-hour Fibonacci from the bottom to the top. That's $41.05 from, wait, no, there you go. No, okay, so $41.4925 or 41.5. Yeah, I think that this is really the way to go. Maybe I'll bring it down here just under the 78.6. And that'll be my trade setup. And I'll look left, target this high as my target, because I'm assuming is that on the higher time frame we're going to get a breakout above here. So this would be my first TP. Let me do this, and I'll say TP1, and then my second one I would look left, and honestly this would be, that's a lot. That's very high though. Yeah, this would be TP1, and TP2 would be, honestly, probably 40, probably negative 61.8. I'd probably just do this. Oh yeah, also I would take the Fibonacci from the top to the bottom. This is another way how I would figure this out. Oh, look at this, 61.8, boom, came up, rejected. Came up to 61.8, boom, rejected. Now it's coming up again. That's pretty bullish. So the 78.6 this is a good area for sure to take some profits. So I would do that, take profit here. And then finally we have the order block, up move for down move. I wouldn't really do that. Maybe if I zoom out just a bit. I mean, this is the clear level right here. It's obvious level, but that's pretty dark. That's pretty high. That's really high. And I don't want to just round trip. I don't want it to come all the way up here and then come all the way down there, round trip it. So I'd probably do this. TP1 right here, TP2 right there. And that's probably what I would do for, I'll do a triple. I'll do a TP there. I'll do this. Yeah, that'll be my trade. Excuse me. This will be my trade. I'll have 4 take profits for this. Okay. And so, yeah, I'm going to end this there. Hopefully this was informative. Hope you guys have a great day. Happy trading. Hope you guys are profitable. And I'll see you in the next market update.